here with deposits expert Eddie Hooker. Eddie, thank you very much for joining us.
Welcome.
Tell me, what is the tenant's deposit protection?
Well, tenancy deposit protection was introduced in 2007, so it's been around for some time now. The way it works is typically as a tenant you will give a deposit before you move into your property to either a landlord or a letting agent, and that letting agent landlord will need to protect that deposit in an authorised government scheme. So that at the end of the tenancy, when the tenant moves out, they can get their deposit back from the scheme if the landlord or letting agent doesn't give it back, or if there's a problem with the deposit at the end, say deductions which you don't agree with, then you can go and speak to the scheme who will help resolve any issues.
And how does TDP affect landlords, and what's the penalty for non-compliance?
Well, TDP is law. So it's a legal requirement for the landlord or letting agent to protect deposits if they're taking them from tenants. And these schemes are throughout the UK. So My Deposits, for example, operates in England, Wales, Scotland, Northern Ireland and Jersey. And there's different penalties in different territories for non-compliance. In England and Wales, for example, if a landlord doesn't protect the deposit and tell the tenant where it's been protected and how the scheme works, then they can be fined up to 3 times the value of that deposit. So if a typical deposit, for example, is £1,000, the landlord could be facing a fine of up to £3,000 and then won't also be able to evict the tenant at the end of the tenancy until the deposit has been protected. So they're quite stringent penalties on landlord and letting agents if they don't comply with the law.
And what are the options for landlords in terms of protecting deposits?
Well, My Deposits will offer 2 what I call flavours of tenancy deposit protection. So there's the custodial flavour, where the landlord physically hands the deposit over to the scheme to look after for the duration of the tenancy, or they can use an insured-based scheme where they continue to hold the deposit but they pay a fee to the scheme in order to protect it.
And how would you say that TDP raises the standards in the sector?
Well, as I say, it's been around since 2007, so it's almost 10 years since these schemes have been in operation. Now, generally speaking, disputes at the end or problems at the end come about in less than 2% of any cases that, or any deposits which a scheme is protected. Now, before we started, there was indications that that level of problem was up to 20%. So over the last 10 years, the number of tenants that have not had their deposits back at the end of the tenancy has dramatically reduced. It's also helped communication between the landlord and the tenant. So it's putting more transparency, I suppose, back into the process, that the tenant knows that when they're handing the money over to the landlord, that it will be ring-fenced, it will be protected, and they won't have a problem at the end. And generally speaking, relations with between the landlord and the tenant have increased and got better over the last 10 years. So it's a good thing. It's worked for most people.
From a tenant's point of view, do you receive anything to know that your deposit has been protected?
So a deposit isn't properly protected by a scheme, and the landlord hasn't complied with the law until he hands over what's called the prescribed information about that deposit. So that's a certificate, a letter or a sheet of paper that contains information about where the deposit is protected, what the scheme the name of the scheme is, the contact details of that scheme, and what to do at the end of the tenancy. So if they have a problem, who do they call, what evidence will they need to supply to the scheme in order to deal with the dispute, and generally just they know that their money is safe. If they haven't got that, if you're a tenant and you haven't got that certificate, then you need to go back to your landlord, back to your letting agent and ask for evidence that the deposit is protected. Don't just wait till the end of the tenancy, realise there's a problem, because by then it will be be too late.
I was going to say that because these days having to move into properties can happen quite quickly.
Yes, very
So
quickly.
if you have already moved in but you suspect that maybe that deposit hasn't been protected, what can you do?
Yeah, you should get that certificate from your landlord or letting agent between 14 and 30 days after you have handed over the deposit. So you may not have even moved in to the properties, but as soon as you hand that £1,000, that £1,500, whatever the deposit level is, within a couple of weeks, maximum 4 weeks, you should have in front of you that certificate. A little bit like when you book a holiday through a travel agent, and they'll send you the ABTA or the ATOL certificate to say that your money's protected. TDP requires exactly the same piece of paper to be sent to the tenant.
Okay, well thank you very much, Eddie.
Very
Definitely
welcome.
something to think about.
Yeah, thank you.
That's Eddie there from My Deposits. I'm joined by Mike, who's here to talk about the importance of landlord insurance. So Mike, why is landlord insurance so important?
Well, it's important because a lot of people look at buying insurance for their let property. And in the past, they've looked at a household policy and assuming that that will do the same job. But it doesn't. With landlord insurance, you get significant additional covers. So, for example, you need loss of rental income cover, so that in the event of insured peril, you can actually claim for the lost rent while your tenant has to move out, vacate the property while the work's being done to remedy the damage that was caused. Property owner's liability is important again, and that's the liability of a landlord in the event that their tenant or their guests injure themselves in the property. The tenant or the guest can actually sue the landlord for damage done to themselves or injury done to themselves or to their property. So again, those extra covers need to be included within a policy, and a household policy just doesn't do that. So specialist landlord policy is important for at least those two reasons. They're the main areas, but there's other areas as well, and that's where coming to a broker you can actually understand exactly what the benefits are that can be gained by buying a specialist policy tailored exactly to your needs.
So what typical cover should a landlord look for within their policy?
There are a number of areas a landlord should look for. So loss of rental income is the key area, because each landlord has a different amount of rental income. Make sure that you understand the level of cover that you need, and you tell your broker, or when you're getting your quotes online, that you actually put in the right amount, and then that covers you in the event that the tenant has to vacate the property. But the sum insured, again, some policies will give you a blanket sum insured, some will actually ask you for the sum insured that you need to represent the full replacement cost of your property. And I think it's important that you, by speaking to a broker, you can understand exactly what level of cover you specifically need. Liability covers are important, but also tenants' contents and fixtures and fittings, because you may furnish the property, where some landlords will furnish, some won't. So it's important, again, to understand the policy you're buying and make sure that you get exactly the cover that suits your needs, really.
What precautions can a landlord put in place, say the property was to become unoccupied?
Okay, well, it's very simple. Most of it is common sense. When you're looking at an unoccupied property, there's differences of lengths of time of unoccupancy. If it's just a void period between rental occupation, so maybe up to 30 days, there's very little you need to do as the landlord, and that's accepted as standard within the industry. But what you might want to do, just to protect yourself, is if you're friendly with your neighbours at the property, just ask them to keep an eye out and look over the property occasionally, and give you a call if there's anything untoward that they spot. Anything longer than that, and it depends on the length of time and what you're actually doing. So up between 30 and 90 days, usually there's some very basic steps you can take. So for example, weekly inspections of the property. It can be you or a friend or an agent that can do that for you. But pop into the property, have a look around. If there's anything that you spot that's untoward, then make a note of it, and then make a note also of the date you inspected the property, and then remedy anything you spot as quickly as you can. That's normally enough for most insurers, up to 90 days. And if it's going to go over 90 days, you're looking at long-term unoccupancy. And at that point, there's specific things you need to do. Mainly in the winter months, you'd look to leave your central heating system turned on so that the property doesn't freeze and you don't get burst pipes when it thaws. If you haven't got central heating, what we'd suggest is you turn the mains water off, drain the system down, and you basically then you've taken away the risk of flooding completely. But again, probably the best deterrent and the most sensible thing is just have a word with your neighbours and ask them to keep an eye out and give you a call if they spot something.
And there has been significant growth in the buy-to-let sector over the last 5 years. Do you think that this is set to continue, and what advice would you give anyone that's looking to enter into the buy-to-let market?
Definitely set to continue. I think that's the one thing we've seen. Total landlord insurance has been in the market for 20 years now. So we started in the market when buy-to-let wasn't really that much of an industry as such. But it's continued to grow, and the population now are really looking at letting as an acceptable way of living rather than the need to own your own home. Coming into the industry, if you're looking from an insurance point of view, what I suggest is, again, do your research. The best way to do that is use the internet. There's landlord associations, National Landlord Association being one that you can actually go to. You can get a wealth of information on the letting industry from them. When it comes to buying insurance, again, do your research, go online, have a look at what's available, but don't buy on price. The cheapest isn't always the best, and you need to make sure that you get the right cover to suit your needs, and really buy on or take advice from a broker who can tell you exactly how to insure your property, what the pitfalls are, and can discuss exactly what your requirements are and give you the policy that best suits that. It may not be the cheapest, but it will actually cover you in the event of a claim.
And what type of cover would you say is needed for a leasehold flat?
Easy mistake to make for a lot of landlords in the industry, where they buy into a leasehold property. You've got an apartment in a block and you think the buildings is insured, so therefore I don't need to buy any additional cover. Significant areas of cover that you do need to look at really are if you improve the property, so you, for example, you buy a new kitchen or you put down an expensive flooring, the landlord's responsibility is only to reinstate the property to the condition it was in when you bought it. Or when it was built. So instead of your lovely new kitchen, you'll be getting a bog standard basic kitchen installed, and standard flooring again. So things like that, tenants' contents and fixtures and fittings is important. Again, property owner's liability cover is important because you have a liability to your tenant, and the landlord or the owner of the property of the freehold won't actually have any obligation to your tenant whatsoever. So that needs to protect you in the event of an injury or an accident. And loss of rent again, because you'll undoubtedly be borrowing or will need to fund the cost of paying for a mortgage. So if an incident occurs and the tenant has to move out, what you're going to need to do is make sure that you can cover that rental income. So again, whilst the property is being reinstated, you'll need to make sure that you've got your income covered. So they're the things that, again, under a standard building insurance that's offered by your freeholder, you're not going to be protected for those at all.
Well, thank you very much, Mike. There's lots of things in there to consider.
Indeed.
Thank you. Sadly, that's all we have time for today, but join us next month for more insights into the buy-to-let market. If you'd like to speak with any of the people that I've spoken to today, then check out the website for details of upcoming shows in your area. Bye for now.